Yo, what's good, y'all? This is your boy Jay Devar, man, bringing y'all another video. And honestly, in this week's video, I'm pretty excited for it because I'm gonna actually be showing you guys my short-term trading model that I'm thinking about actually, just fitting my trading style around. I kind of feel confident with it. I kind of feel like it fits well with my personality. It's like straight to the point, organized, have set days where I'm executing, and just I've been I've been studying this for like the past like 2 weeks with ICT because it was an ICT video that I stumbled across. It was one that he did like 6 years ago, talking about like how to trade like weekly ranges using the weekly bias, and then how you frame short-term trades inside of that, inside of those weekly ranges. So I'm also kind of going to mix it up a bit too because I also have been learning about like internal and external range liquidity. So I've been learning about those concepts too. That a lot of ICT or a few ICT traders have, put a couple videos out about. TT Trades was one guy that, whose video I watched on the internal and external range liquidity. I recently started watching this guy named Sniper. He looks like a pretty good trader, pretty good ICT trader. So I learned a good little bit from also his videos also. And also too, I may be implementing a little bit of the S&T divergence, although it's not really necessary. And sometimes I do still kind of like find myself marking unnecessary ones instead of focusing on the ones at the like higher time frame levels of where you want to see the reversals at. So like if you get to the weekly internal range liquidity, that's where you want to see like an SMT form, and those are the ones that you want to pay attention to when you're trading correlated assets. And that's also too where you want to see those reversals framed. So like the market structure shift plus the S&T divergence, with the correlated assets. So yeah, I'm really excited to talk to you guys about this. And I'm actually, one of the examples that I'm going to be breaking down is actually one of the trades that I actually took this week. I didn't exactly execute this trade to the best of my ability, and I also didn't follow my rules a bit, which actually didn't come until like I actually went and rewatched the ICT video again, that specific one that I mentioned earlier about trading the weekly ranges and framing short-term trades inside of that to catch like the weekly expansion, right? So yeah, man, I'm gonna just just rewatching that video. I actually learned something that actually would have helped me this week while executing this trade, and that's really the benefit of watching something over and over again, because sometimes you may pick up on something that you didn't hear before or that you weren't necessarily paying attention to before. So yeah, man, I'm gonna teach you guys that, and I'm gonna show you guys like how that kind of like messed me over this week with that particular trade. So without further ado, we're gonna get into it. And before we do that, real quick, I want to ask you guys, please subscribe to the channel, like the video, leave a comment down below asking about, if you have any questions about the strategy, or just like, any questions about my journey or anything like that, or just if you want to make some conversation, or just like, give me some support in my journey, you know what I mean? So, but moving forward, this is kind of like the trading model that I really do feel a lot comfortable with, and it's something that, I don't have to think too much about. It's something that like I'm kind of just like, man, it's just so simple for me to follow this. Like, it's clear and concise. The rules are simple. I can just follow this, no problem. So that really resonates with me, and I think that resonates with my personality. So without further ado, we're gonna go ahead and get into the video. So I'm gonna break down the rules for you guys. So here we go, the short-term trading model. So rule number one is we're going to identify the monthly range. And with identifying that monthly range, we're going to identify if we are currently in a premium or a discount of that range. So what I mean by that is like, I'm going to show you guys right here on US 30, right here. So right here from this the monthly chart on US 30. So this high, not high, but this low to this high right here, right? This is that monthly range, right? And you see I used the Fibonacci tool, and I just marked everything below the 50% level green, so that means that's the discount area, and everything above the 50% level, that's the premium area of this monthly range right here. So in the first step, not only do we have to identify the range, but we also have to identify if we're currently in a premium or a discount of that range. And so currently right now, the current price action, this current monthly candle right here, we're currently sitting inside of a premium of this range right now, right? And as you guys can see, we do have a internal and external. We have an internal range right here. So this monthly fair value you got right here, this is the internal liquidity right here. And you see with this monthly candle, we've already tapped into that. But I'm not going to be paying attention or trading this off of the monthly. I'm just using this as like a higher time frame bias right now. So so I just have this level marked out on the monthly in this premium range right now because when price is making its way towards, working its way towards down towards this discount area right here, you see we have another monthly internal range right here, and then we have another one below that. So any type of pushes down this area right here, I'm expecting like some type of retracement before we do eventually see maybe another candle, another monthly candle, which is actually going to be sometime around next week because next week is May 1st on Wednesday, and that's basically going to be the new monthly candle right there. So that's going to be pretty interesting to see how this price action plays out, because also too we do have the I want to say we have the hold on, this is current week. Yeah, so next week we have NFP, and then also next week we also have the federal funds rate. So the Fed is going to be coming out with their interest rates. So depending on if they raise or lower their interest rates, or if they just leave it the same, that'll be some pretty nice or some big volatility in the market next week. So if I don't see any type of setup by Wednesday going into next week, I'ma just sit back and just let it do what it do, and then we'll see what happens, and then go into it next week. But currently, right now, any type of like retracements, this would be the first level right here. This internal range liquidity right here. This would be the first level. And you see, that's actually what happened. I'm not sure if you guys can see this long black wick, but this long black monthly wick, that's from reacting off of this monthly internal range right here. So. So yeah, there's that. So then the next step is we identify any weekly ranges in the current price action. We will use the concepts of internal range and external range liquidity within these ranges. So you guys can see this another range I have marked right here. This one I marked red and blue so that it's a bit easier on my eyes because I can clearly see what's going on right here. But the reason why I have this marked out is because this is a weekly range. So from this low right here that caused an expansive move above the high right here, this is currently my premium and discount range of the weekly right here. So basically with this one right here, you guys can see the past couple weeks we had price reacting off of a weekly order block, right, resting in the discount of this weekly range that's marked out from this low to this high right here on the weekly time frame. And currently as it sits, we've respected this weekly order block in the discount of the range, and we also had a S&T divergence with another asset on US 30. I want to say it was SPX. Yep. So you see the S&P 500, it formed a lower low. Meanwhile, US 30 formed a higher high on the weekly time frame. So that break these two assets, and honestly too, you can use NAS also, but it's kind of like with all three of them being indexes, it's kind of like if one of them, you just need one of them to either fail to make a lower low or fail to make a higher high, and then that'll give you that S&T divergence because these assets should be correlated. So that means that they should be having the same price action or moving in the same direction. But based off of the lower low that was formed on S&P 500, but a higher high was formed on US 30, right? That's the S&T divergence that we're looking for. And it also occurred by hitting a weekly order block and also inside the discount of this weekly range right here. So that's why we favor to look at higher prices And you guys will see this box right here. This is actually one of the trade ideas I had going into the beginning of this week, right here. But we're gonna get to that in a bit. But so yeah, we identified a weekly, any weekly ranges inside of the premium and discount range of the monthly range that we marked, because ideally wherever we are on the monthly, we want to trade that direction in the weekly, right? So as you guys can see right here, right, we have two internal range liquidity areas on this weekly time frame. So this expansion move right here, these two bearish candles right here. So we have a weekly internal range right here, and then we have another one right here, and this is the one that we're currently respecting right now. So ideally, any type of reversals that we see in this area, we want to be a seller, right? And I actually show you guys the example, because like this is the perfect example of like, because as I'm going through the rules, like sometimes it might not happen exactly as the rules say, but based off of that, you know, still going off of some of the other rules that we have, like, you know, waiting for reversals inside of like these higher time frame areas right here. So in this case, this higher time frame internal range on the weekly, right? So it's not always gonna happen exactly like how I have it lined up, but it's like still based off of the bias that we're formulating, you know. So right here in the discount of the monthly, and then we're also in the discount of the weekly. Not the discount of the monthly, but we're in the premium of the monthly, but we're in the discount on the weekly. So we're going to see higher prices on the weekly short term, right? Until we hit a level inside the premium of the weekly range. And then that's where we look to form a type of reversal, right? And I'm gonna get to the trade that I took in a bit. I just had to break that down for you guys. So rule number 3 is we're going to identify if we're in the premium or the discount of the weekly range, and I kind of already just did that. I'm moving ahead. I apologize. And we're going to form those trades on the weekly time frame in direction of the monthly time frame. So like I just said earlier, we're in the premium of the monthly, right? We were in the premium of this weekly range right here, the one that's red and blue, this one right here. Then we came down and we hit the discount area of this internal, or of this weekly range. We hit an order block, and also too, we're also resting inside of one of the monthly internal ranges that was marked on the monthly time frame. Remember I told you earlier in the video that like that monthly internal range right here, that monthly internal fair value gap right here, if we saw any type of like say retracement back upwards or any type of like resistance towards price, it would have been right here in this area, and that's exactly what happened as far as right now. But on a long-term monthly perspective, we're anticipating price to head lower and hit down into anywhere inside of this discount range of the monthly, right? So as far as right now, I really don't know if we're gonna head higher from here and hit this weekly internal liquidity pool, because it's still in the premium, and then we finally see that shift, that market structure shift, and that large run lower and taking out this new external range right here with this weekly low right here. So ideally, if we're gonna head lower and head down into the discount on the monthly, we want to see this weekly low right here, which is the external of this range, of this current weekly range that we're in right now. So we had a high and then an expansive move lower, taking out these previous highs or these previous lows right here, these previous lower highs right here, taking those out. So now this technically is another range in itself, but I'm not going to mark that one because I can just clearly see it, you know, that is already in a premium. So ideally we want to see, to get here, we want to see this taken out. So I'm going to go ahead and mark this the external range liquidity. And then we're gonna do the weekly. We're gonna put W, so we know, or that's how I do it. W for weekly. So we want to see this low taken out, and ideally we want to see it run through this fair value gap that's resting right here, right? Because we want to see this range broken right? Because this is a short-term range, so we're looking to enter, in trades inside of the premium of the monthly, and we want to ideally be sellers and target below this. So we want to see any type of like bullish PD array be broken. So in this case, this bullish fair value gap right here inside of this weekly discount, we want to see this broken and reach down into this monthly discount, right? Because this is our higher time frame, and our long-term bias right here is getting down in here, right? So with that being said, currently I don't know what it's gonna do. It could reach for here, or with it respecting this weekly internal, right? We can see it finally head lower and tap and run this low, and then from there I might just sit on my hands. But so back to the rules, right? So the next rule is we're gonna mark Sunday's opening price, right? And I already have that here. I already did that this week. Today is Saturday, so the 21st of April, that was Sunday. So I marked that. I'm gonna go down to a lower time frame. So from weekly, right, I go down to the 4 hour, right? Because I can clearly see what the internal and external liquidity is on the weekly time frame. So I don't really have to go down to the daily, right? So I just skip down to the 4 hour because this is my first executable trade entry time frame right here. And if I want to find a different type of entry, or like an entry on the lower time frame, I normally go to the 1 hour, and I won't go down lower than the 15-minute, because anything past that, it's kind of like I'm day trading, and I don't like trading on the lower time frames like that. I get faked out a lot, and I just stay away from it because that's where I was losing so many of my trades, like on those lower time frames like that. But switching to this and having this in mind, I'm more comfortable with it this way, and honestly, taking one trade a week seems a lot more, less stressful and more simplistic, especially like when you have rules set in place. So now we're on the 4 hour time frame. This is my executable time frame, like I just said. And let's go back to the rules really quick. Go back to well, damn, where's that? Man, where my rules at now? Okay, there we go. I don't know why TradingView want to act funny. Right, okay, so we'll mark Sunday's opening price, right? So we are back. I'm actually gonna move this a little closer, really quick, right here. So I ain't gotta do too much scrolling up high. So yeah, now we're down onto the 4 hour. And bro, where are my rules? Why did they move over here? All right, that's weird. Okay, we're just gonna move it over here. That's weird. All right, so we're gonna slide over here real quick. Slide over here. All right, we're just gonna bring it a little closer. I'm sorry about this, y'all. I don't know why it's acting like this, but okay, like look, like as soon as I scroll high as shit, it wants to do all that. Boom. Okay, there we go. All right, let's continue with the video. We'll just go up there, scroll all the way the fuck up there, I guess. It's just retarded. It really is. I'm gonna just drop it like right up here on top of it. Shouldn't be too much foolery going on now, huh? Nope, it's still all right. Fuck it, whatever. So, so we mark out the Sunday open price, right? The Sunday open price for last week was right here, this low, right here. See, for Friday at 9. Yep, Sunday at 5 o'clock. Right. That was Friday's close. So Friday's close is Sunday's open. Right. You see, we had that marked right here. So, so now since we had Sunday's opening price marked out, the next step is we we determine if we're bullish, we want to see the weekly low form between Sunday and Wednesday, and ideally we want to see that happen between Tuesday's London and Wednesday's New York open session. If we're bearish, we want to see the weekly high. We want to see the weekly high form between Sunday and Wednesday, and we want to see that ideally form between Tuesday's London and Wednesday's New York open session. So in this case, I was bullish for this week because since we created this lower, we didn't create a lower low on US 30, but we did that on the S&P 500, right? This SMT divergence right here that occurred at this order block, this weekly order block right here that I have marked out because that's that weekly order block level. Because this happened right here, I immediately switched my bias to bullish because I figured that since we created this low right here, this low should be protected, so price shouldn't want to run any lower than this. And then I want to see a reversal back up towards the weekly internal range that we had marked. So that weekly internal range liquidity that I had marked earlier, which is right here, it's resting right here. So you see right there, boom, boom, and we actually hit that area. So my mind, or my kind of like my execution or my mindset going into the trade this week is with this Sunday's open right here. I wanted to see price like on Monday start ranging below and potentially tap into this fair value gap that's resting right here that you see that's already right here. So this fair value gap that was formed the previous week right here, I want to see price actually come down and tap into this area at the start of this week's open. So on Monday's range, I kind of want to see it like head lower, right? Head lower and either hit this fair value gap or hit somewhere down into the inversion area right here. And there was also a 1 hour fair value gap that I had marked right here, which is where the entry really is at. But I could have easily targeted right here and then got a different risk to reward, but I kind of wanted a better risk to reward. That's what I get for being greedy. But as you guys can see, remember what I said earlier in the video is that a lot of sometimes it won't happen exactly like that, but either way, so because I was bullish, this is what I preferably wanted to see, a run lower on Monday, and then between Tuesday and Wednesday get that reversal right here. So see that reversal or that run higher from this fair value gap right here, from this 4 hour fair value gap, and then the run back, and then the run up into the internal range liquidity on the weekly time frame. However, that did not happen, right? Instead, what happened was Monday we went ahead and ran higher above the Sunday opening price, and then we retested it, right? And we retested it here on Monday, right? And then formed a high on Monday, right? So going into Tuesday we ran Monday's high. And where did we run Monday's high at? Inside of this internal range liquidity. So basically with this going on, this trade down here is basically kind of like invalidated in a sense, right? So instead of taking a step back, instead what I did was I shifted my bias towards, okay, now since we've already hit this higher time frame area that I was targeting anyway, I was already anticipating or looking for some type of reversal in the area anyway, so I instead shifted my bias towards being bearish. So with that being said, we're not worried about Sunday's opening price anymore, right? Because our bullish idea is already, out the window because it already traded away from it, right? And there wasn't any type of retracement towards it up until later in the week. So, and we already hit a higher time frame level, so we're anticipating a reversal anyway. So that's exactly what happened here. We hit this internal range liquidity, and on Tuesday we failed to run this high right here. We failed to run this previous week high from 2 weeks ago. So from Thursday, April 11th to Tuesday and Wednesday of April, the 24th of April, right? We failed to run this high right here. And you see I have it marked from a daily perspective of S&T divergence with the S&P 500. And if I go to that, you'll see that so from the 11th, it looks so different on this one. see. Daily S&P. Let me go back. Did this one. Okay, so Thursday, April 11th to Wednesday. Now let's go over to, obviously we're not gonna do that, but okay, so this is technically still like within that same week, but yeah guys, so from the previous week we ran this week from last week on Wednesday we ran last week's high. So we formed a higher high right here on the S&P. However, on US 30 we didn't break above one of the highs from last week. So US 30 made a lower high, right? So that there's our S&T divergence from a daily perspective, right there. So with that going on, that basically triggered in my mind that okay, I need to shift my bias from bullish to bearish at this point in time, and that's exactly what happened here. So you see, we failed to break above this high from the previous weeks, so that high is still intact, and then we see a run lower. So we now have an inversion fair value gap. I'm actually gonna go ahead and mark this inversion. So we have an inversion fair value gap right here, and price actually respected this internal price actually respected this inversion fair value gap right here. That's inside of this internal range liquidity, right? Compare it with the S&T, right? So my first entry was up in here, right? Because actually my entry was on a 1 hour time frame, right? So my entry was on a 1 hour time frame. I used this order block right here, this 1 hour order block right here, right? And actually no, my entry was actually only 15 minute. My bad, I apologize. Yeah. So we have a 15-minute breaker, right? Yeah, we have a 15-minute breaker, and then we also had a 15-minute fair value gap right here. So this is two extra confluences, you know, kind of telling me that like, okay, we're gonna run lower. And thankfully, I was looking at the market at a time where like, you know, this was happening during the afternoon session, so like during the Asia session. So I already had it in mind that like, okay, I'm gonna put my entry right here, and I'm gonna put my stop above here, because this high should be protected, because this should be the high of the week, because we had an S&T divergence with the S&P 500 with US 30. So based off of that, I had full confidence in taking this execution. And then, you know, my target was the external range right here from last week. However, like I said, remember I said one of those rules that I learned when I went back to watch the video from ICT, is basically like, remember that we were still bullish here. We have Sunday's opening price right here, right? So whenever we see price trade away from Sunday's opening price, ideally you don't want to see it come back to there, because normally what happens is that provides support. So with that being in mind, I should have been paying attention to, okay, instead of actually targeting all of this down here, because what also happened was on a 4 hour time frame, remember that fair value gap that I had originally as my entry, right? Well, it came and hit that area below the Sunday's opening price, right? And then we basically reversed and headed higher. So what I should have done was, I should have actually, instead of targeting all the way down here, I should have actually targeted at least back to Sunday's open and got a 2-to-1, almost a 3-to-1. Or I could have targeted one of these fair value gaps right here, or one of these volume imbalances right here. These BISTs, so these buy side imbalances, buy side imbalance, sell side inefficiency, right? So I should have been targeting either one of these right here instead. And honestly, I could have just closed the entire trade after taking like a 2-to-1 or 3-to-1. But however, my mind was set on this, and this is where I actually messed up. I should have took something off, right? Once I find out about, you know, that rule. But so now currently as it sits, probably on Sunday open of tomorrow, I'm probably just gonna go ahead and exit out of this trade altogether. You know, and then just try to like see what the next week gives me. Like I said, we can come back and retest this internal range weekly right here, but ideally I'm gonna be waiting between between Tuesday and Wednesday to see what happens. Because like I said, we also have some pretty volatile news events going on in the next week. So we have the FOMC, we have the federal funds rate, they're gonna be coming out with interest rates, and then we have NFP also on top of that. So in my perspective, I think that we are actually going to run higher. So I would be bullish, right? So ideally I would be bullish, right? Because we have this large wick right here on the 4 hour, right? So that should be a protected low, especially since we ran away from it and we created a fair value gap and we're heading higher. That's why I'm going to close this trade out right here, because I think that the trade is in break even. However, I might as well just take what I already have and just roll with it and just roll on to the next week, right? But I really honestly think that, or I'm anticipating that with the amount of news that we have coming in before we get to Wednesday, right? Monday and Tuesday, we should see a run higher. And then a run lower from this area, right? But we have to see a market structure. We have to wait for a market structure shift. That's one of the rules, right? We gotta wait for a market structure shift. Okay, where are my rules at, man? There we go. So as you see, wait for a market structure shift on the 4 hour or less once price trades to the weekly external and internal range. I already discussed all that. You can use S&T divergence with correlated assets for extra confirmation, but it's not really necessary. If you want to look for that, you can, or if it's like taking up too much space on the chart for you, you don't have to use it. But as long as you see like a market structure shift occur inside of the area, that's where you want to look to execute. And the stops, so rule number 6, the stops go above the high or low of the week depending on the bias. So in this case, when I switch my bias to, okay, we're going to be bearish, so we're going to look for some type of target below, my stop goes, as I just showed y'all, my stop went above this failed higher high right here. So my stop went above Wednesday's high, right? And then I look to, like I said, I wanted to have all of this right here, this weekly external range liquidity taken out right here this week for like a 7-to-1, but unfortunately that didn't happen. That didn't pan out. So, yeah. So, that's basically my short-term strategy right there. Oh, one more thing. Reason why, like I said, that I should have exited earlier, especially like when we hit Sunday's previous opening price, is because it's likely that the weekly is likely that means that there's some type of reversal if it trades back to Sunday's opening price. It's likely that there's some type of reversal that happened intra-week, or most likely it's going to consolidate between Thursday and Friday, and that's exactly what happened here going into Wednesday with my sell position, right? So we hit this 4 hour fair value gap below Sunday's opening price right here, and then basically Thursday we reversed. So we reversed back in the opposite direction of my previous bias of being bearish, right? And then so Thursday we consolidated a bit, and then Friday we consolidated a bit also, and then it did what it did. So it ran these lows and it made a new high up here, blah blah blah. And yeah, either way, I should have been out. Once it got to here or it hit there, I should have been out, right? But I just wanted, my mind got fixated on, I wanted this area right here. I should have just took this off and just been happy with what I had made. But we're gonna close it with a lot less. But either way, the trade is in break even on the trading platform that I use. I just had to stop right here for the video. So yeah, y'all, that's basically my short-term trading model. This is the model that I'm going to be looking to use because for me it's super simple. The rules are simple, they're straightforward, and they're really easy to follow. Just simply identify your bias, and then with that, whatever bias you have in mind, you mark the Sunday open. If you're bullish, you look to see a run below and then potentially some type of reversal or reversal confirmation heading higher, and that also has to occur at some type of higher time frame level, right? So with the bullish example right here, again, that weekly bullish order block, right? That basically confirmed that those higher prices for us, right? Or that bullish bias, right, up higher and up into this internal range liquidity, weekly range liquidity right here. So yeah, and if you're bearish, you want to see like the weekly high formed at a higher time frame level. So right now I can be bullish and want to see price form some type of reversal pattern. So probably run this low right here and not take this one out, but probably run this low, and then between Tuesday and Wednesday have some type of reversal pattern and then head higher, right? Because this right here technically is a liquidity raid if we do see that, right? So, and then because this is my intended or my anticipated target, I'm looking to be bullish right now, right? So some potential type of break. Now how that gets unconfirmed is if we actually head lower and then we actually do take out this external range, and honestly at that point, you know, we just sit on our hands and wait because we already missed the move, right? But between Sunday and Wednesday, we want to see, right now being bullish, I want to see like some type of reversal pattern below Sunday's opening price and then head higher and break above. And if it retraces back down here, right, at any point before, if it retraces back down here after Wednesday, that's where you exit, right? Because that can mean like a reversal, and then we head lower, and then it'll take out our stop if we actually executed on a trade right here. So say we did execute somewhere in here, right, and we want to target this, but say after Wednesday it doesn't reach here and it actually falls and retraces back down into that Sunday open. By then you want to get out because the algorithm only has between Thursday and Friday to actually make a run, if it's going to make a run, right? And by that point we can see some type of reversal on Thursday. So Thursday we actually head lower, and then Friday we take out this external range liquidity. So yeah, that's my current idea in mind, and also too, that's currently how I went about going about the model going into this week. So we didn't exactly execute the trade like we should have. However, when Sunday opens, the market opens up on Sunday, I'm going to be looking to definitely go ahead and close this trade and then just go with that bias in mind. So with that being said, that's the end of the video. I'm going to go ahead and wrap it up here. If you guys learned anything, please let me know in the comments below. And yeah, subscribe to the channel and like the video, man. And I appreciate it. And I'll catch y'all in the next one, man. Peace out.